It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, October 6th, 2016. We're heading into Non-Farm Friday tomorrow, and we have some big news on the schedule that will most likely give us some big opportunities. Crude oil is bullish and trading at the highs of the session, trying to get away from that $50 a barrel. We'll see how it goes tomorrow. Even the S&P is bullish and trading at the highs of a spiking channel. Gold is bearish and trading at the highs of its spiking channel. And of course, Euro is bearish after a strong push lower today and trying to make it back to last month's low. I got a great newsletter in store for you guys tonight. Got a great plan ahead of tomorrow's non-farm payroll report. And of course, look forward to seeing you guys tomorrow morning in our trade room along with all the students. Before we jump into the chart show tonight, I do want to remind you the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come over here and watch the video, the full-length version, on the blog at Sideways Markets. While you're here, don't forget, make sure you join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts below tonight's video. You can grab all the charts from tonight's video and have them ready for your own trading tomorrow. In the upper right-hand corner, don't forget, if you're not a member here at School of Trade, I got a free pass for you. Come out and test drive the trade room as a guest for a couple days. And of course, don't forget, guys, we had a great frequently asked questions page here for all the newbies out there to the School of Trade community. If you're brand new to School of Trade, make sure you read those frequently asked questions to learn more about the who, what, where, when, and why. All right, guys, what a great week we've had. First week of the month of October. We're getting into the best time of the year to be a trader right now. And of course, let's check the schedule here for tomorrow. We really don't need to talk much more about tomorrow's non-farm payroll report, but let's make sure we have everything, all the T's dotted and the I's crossed here. No major news out of Asia tonight, so we go right into tomorrow morning in London. And of course, we got 3:30 a.m., some minor news there at 4. That's about it. So we got 3:30 a.m., we got the Halifax Home Price Index, my good friends in Great Britain. But then, of course, we take a hop, skip, and jump, and we run all the way down to 8:30 a.m. with the employment situation. Make no mistake, that is the big news here for tomorrow. The first Friday of every month, assuming the first day of the month is not a Friday, right? We, of course, have non-farm payrolls. The most important thing to remember about non-farm payroll Friday is that leading into the report tomorrow morning, you're going to usually see quite low volume. And really the reason why, as we talked about in last night's newsletter, is because large fund managers, hedgers, right? Everyone who has a lot of a risk in the market, right? Take big positions in the market. They're not going to be able to get out of positions if they're on the wrong side of this news. So what you want to remember is ahead of non-farm payrolls, and this goes for a lot of the major news, right, that we get out there. Ahead of that news report tomorrow, we expect most traders to be flat, all the educated traders to be flat. And of course, it's going to result in a lot of low volume. So careful before the news tomorrow morning, right? A lot of the bigger players in the market are not going to be involved until after the news. And then in my experience, you're usually going to get one of two scenarios after the employment situation. The first scenario is where the price moves too fast. It gets dramatically volatile, dangerously volatile. If the news comes out tomorrow morning and it's outside of what they were expecting, remember, analysts have known about the expectations now really since Wednesday's ADP employment report, right? Wednesday morning's ADP employment report pretty much puts the numbers together for all the analysts. So as of right now, if we come in tomorrow morning at 8:30 a.m. on the non-farm payrolls and we're outside of expectations, now the analysts have to scramble quickly and go into plan A, plan B, or plan C, right? If it's up, if it's down, et cetera, et cetera. And that usually causes a little bit of chaos. So if it comes out unexpected tomorrow, it's going to move real fast, and we're going to give it at least 10 minutes to calm down afterwards. Now, if the number tomorrow comes out within expectations, now, of course, everybody's already known what they were expecting, and the market has already priced it in, which means if we see a number that everyone's familiar with and expecting, then, of course, the market will typically be relatively slow. So in my experience, And of course, it may be a little bit of a combination of both tomorrow, but usually we're going to get either the market moves way too fast, right, dangerously volatile, or the market will move extremely slow and sluggish. Either way, give it 10 minutes after the news report comes out, find that new trend direction, right, set your levels, find your objectives, and then look for those proper entry triggers. So tomorrow morning, easy does it before the news comes out. You know, even the big moves in London tomorrow are probably going to be a little bit low volume, so be careful. And again, after the news, give it at least 10 minutes. If it's moving like a wild animal out there, let it calm down. It's the end of the week. No need to go giving back profit that we've made already this week. Now, don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern Time with all of our students here at School of Trade, and we're going to put the plan together. So don't forget to come out and join us. Now, speaking of the plan here, let's put this plan together for crude, S&P, gold, and of course the euro. Now, non-farm payrolls, non-farm payrolls is going to directly correlate to the dollar, which means it'll have a small impact on the euro, big impact on gold. So not expecting to see too dramatic of a response to crude oil tomorrow, right? One of the reasons why we love trading crude oil is because it's not as susceptible to kind of major news swings. But you do want to be aware there will be a self-fulfilling prophecy leading into 8:30 tomorrow morning. But again, if I could choose one market that will be the least affected by tomorrow's big news at 8:30 a.m., it's definitely going to be this market here, the crude oil futures, right? The CL. So now that you know the plan for tomorrow's news, crude is bullish and trading at the highs of the session, which means tomorrow we will be looking for clues to see if the buyers either want to keep pushing price up, right, to complete the measured move up there at 51, or if they take profit here and let price collapse back down to the round number at 50. Buyers need to see price continue with strength and hold above the double up at 50.49 if they're going to get anything running up to those highs of that spike in channel and potentially up to the measured move. If the buyers can't keep this thing at these highs, if we can't hold these highs and keep pushing higher, then we expect to see a trading range develop where our focus will be to buy the lows and take profit back at the highs. Sellers got to stay patient right now. They need to get back below the moving average and hold a pullback without selling into the support trend line on the way back down to $50 a barrel. Now, obviously, we finally got to the $50 a barrel level here today, right? We saw that nice dip early in the session, and then of course, right, the move up to that $50 a barrel. What was very impressive though was not only the strength of the market going higher, but how when it pulled back, they just simply used that 50, right, to buy it. Now, like I said yesterday in last night's newsletter, typically when we get to a big round number of this magnitude, $100 a barrel will be another example of that. $75 a barrel, right, another example of those kind of big deal round numbers. Typically, we're going to find a few days here where we're going to be kind of range bound around that big round number. Now, we're going to have to wait and see proof of that tomorrow, but don't be surprised if by the end of the day tomorrow, we find ourselves kind of trading in a range, either just above 50, just below 50, or smack right on top of $50 a barrel. As of right now, though, we have no proof of that. So again, I'm just kind of making you aware, whenever we get up to a big round number, we typically find some balance there for a while. You've got sellers trying to fade it. You've got buyers trying to buy through it. So, again, it does typically kind of stick around those significant round numbers for a few days here. So tomorrow may not be any different. I think the big thing right now that stands out is the fact that we're pretty much sitting right at that high of day. And that high of day also, well, again, it's not the exact high of day. It's the double up, right? It's pretty much the high of this range. So when I look at this chart, the first thing I think of is I could easily see this being a range, right? I could easily see this tomorrow, right, setting up to being a range here, and of course buyers buying low, taking their profit back at the high. So watch out for that possible range tomorrow. We get some news at 8:30, so it's very difficult for me to tell kind of what is likely to happen here. Either it's going to be a range, or I think the next logical thing here would be there's your double up, right? Significant area of resistance, right? A significant market objective. Either that or these buyers really need to show us that they mean business and get this price punching higher and get this thing above that, right, that double up. So I think right now, for the buyers at least, this moving average is really going to be a key component. I talk about this a lot on the newsletter. We really don't want to buy breakouts unless we have some real good strength. And an easy way to define that strength is if the moving average was able to get and stay above, in this case, it's 50.49. So as we push higher here, or should I say if we push higher here, we want to see how the next few hours go as we open up at Asia. But if it does push higher here, don't be fooled. What we don't want to do is we don't want to try to buy that pullback below that double up, right? Because then that's resistance. We want to make sure we stay patient and really get that proof here. Breakout, pull back, right, and then go. Now, if we do get that breakout, pull back, and go, we've got this spike in channel here we're looking at right now, right? Spike in channel is a little bit foggy right now, but that, of course, will be anticipated resistance overhead. And then also, too, we have that measured move now all the way up, which is conveniently right at the same price as that triple up and the next big round number at $51 a barrel. Okay, so buyers, if we do push higher, looking for that breakout pullback above 50.49, and again, the key will be that moving average. Now, what else can we think here for the buyers? Well, let's assume now price goes lower. We want to watch this trend line down here because this trend line has a lot. It's a pretty important trend line. It's a pretty obvious trend line. You know, all you're going to do here is just draw that trend line up. It's very obvious. And whenever we see these markets, whenever we see a chart where there's an obvious support trend line, we have to assume everybody's going to see it, no matter what time frame or what what chart type that they're using. So here's a scenario to consider for tomorrow. We pull back. We test that trend line or around that area. Now the moving average comes over. What's going to happen? Sellers now are going to aggressively start thinking we're going back to 50. And if they hold this pullback, we likely will. However, it's a bull market, and until proven otherwise, we're going to look for those sellers to fail and keep buying this thing right back up again. So as this price pulls back, right? As this price pulls back, we're looking for seller failure at that rising support. Now, what if we get even further, right? If we get even further here now, this is where the sellers really have a shot here. Because if we can get below that trend line and use that trend line as resistance instead of support, now that's something the sellers can sink their teeth into, right? That's something the sellers can definitely get excited about. And of course, their target will be back at that $50 a barrel, with another target being back at the low of the correction zone at this 49.69. A little bit tough to tell where we're going to go right now, but that will, of course, be the targets for those sellers. And if they really get this party moving well, right, they're looking to go all the way back down to that low. It's tough to tell right now, like I said earlier, just because of the fact that we don't exactly know what tomorrow's news will look like, but definitely be watching for those selling opportunities here, holding pullbacks right below. Again, the key right now is that when we are in a bull market, we have to get below support, hold a pullback, and then we can start looking to be a seller here right now. Okay, definitely feasible for tomorrow with that $50 a barrel below us, right? It will definitely be an opportunity here for those sellers if they can get below that rising support trend line, right, to be able to basically have enough room to sell this thing back down. Now, one more thing for the buyers though. As we go lower here, we get back to 50, here's what you want to think. Again, right now I'm just going through all the scenarios right now. We don't really know what's going to happen here at this point, right? Let's say we do end up, right, coming back down, holding that pullback, right, and chopping around here a little bit. This is where I really want to see a strong break, hold that pullback, and go. This is going to be a tough one, right? If we pull all the way back to 50, then we run the risk of having that kind of magnetic field pulling that price back to 50, and it's a Friday, so if we do end up back at 50 late in the morning tomorrow, you know, Fridays are always early in, early out, it might be a little bit more on the lower volume side, so maybe a little bit challenging to get this price to push back. Most important thing, though, is that if we do end up back around 50, this will be a short-term bear market, right? The bears would have held below that trend line, and so what I want you to remember is that for me to want to buy this thing on the way back to those highs, I'm going to really have to see some strength, okay? Strong enough to intimidate those sellers from trying to fade this thing back down to that $50 a barrel. All right, guys, pretty good plan there for the crude. Pretty good plan there for the crude. Again, if it breaks higher here, it's got to do so on some really good strength, right? If it goes lower, that's where the meat and potatoes are tomorrow, right? Seller failure, breakout pullback, right? Those are going to be some opportunities here for those buyers tomorrow. And again,